Quick reminder to get 38% off with the coupon code. Link down below for the amazing programs on building your wealth with private live streams and chat where we get to talk together. Check those out down below. The coupon code does expire on Friday and the price will be going up.
Well, the cat's out of the bag. Robinhood has secretly filed for IPO. Now the big question is, do we even care? There is a lot of negativity regarding Robinhood surrounding the events that unfolded on January 28th, which also happened to be my birthday. No relation. Obviously, the GameStop crisis is stopping people from being able to buy GameStop stock and options around January 28th led to a temporary exodus of people from Robinhood. Now, we don't know if there was a net exodus, that is more people leaving than coming in, but these things are going to be very important when it comes to deciding, do we actually buy Robinhood when the IPO comes? And how the heck do we even value this company? We hear rumors that this used to be valued at $12 billion, but maybe it's going to be coming out at 40, 60, 80 billion dollars. How much could Robinhood possibly be worth? Well, this is sort of a first reaction video on my thoughts in terms of how I would value Robinhood. But first, I want to set a quick bit of groundwork. My hypothesis for Robinhood. My belief, and this is an unpopular belief, I am saying this as an investor, so take it for what it's worth. As an investor, when I think of Robinhood, I think they have nailed options trading. They are the platform that has figured out how to do the cheapest and easiest options trading. Maybe not necessarily the cheapest, I shouldn't say that, but certainly the most simple options trading. They've got that down. When it comes to buying Bitcoin, they, hands down, out of all of the tests that I've done, and I've done a few more that I haven't published on the channel, but you could just take a look at cheapest way to buy Bitcoin or Meet Kevin on YouTube, and you'll see a video I made comparing at least BlockFi, Robinhood, and another one. And I've done some of those tests similarly with other companies. I plan to eventually release a video on that. But anyway, spoiler alert, every single time Robinhood is the cheapest. Now, the problem with Robinhood is you don't actually have ownership. There's no crypto wallet, right? We don't need to, this video is not to try to encourage you to buy in Robinhood. If you want more on that, watch the other video and you'll understand my conclusion. Should you buy on Robinhood or not? The conclusion's in the other video. But anyway, the point here is Robinhood has made a lot of things very easy for people. And there are a lot of people that don't invest in GameStop. And there are a lot of people who say, I would have never bought Robinhood anyway. There are a lot of people who use the Robinhood debit card, which I don't know if that's ever going to focus. Probably not, but eventually. Oh, wait, you can always focus on something by just putting it right next to your face. See, I've never used this once. But anyway, there are a lot of people who have their options in their stocks. They auto deposit money in, or when they get money, they deposit in, they spend it on stocks, and they're out of there. They may not have even known what happened with GameStop, which sounds crazy. It's really concentrated, though, on YouTube and Wall Street Bets. So now what I want to try to figure out, which is very difficult to do, is what percentage of people who are Robinhood members are actually also on YouTube and Wall Street Bets. Is it 90%, kind of like how we might feel? Or is it more realistic that maybe 5 or 10% of people who are Robinhood users are actually involved in the GameStop drama? And how many poor people signed up for Robinhood during all of this drama? See, the other thing that's crazy, and I learned this really early on in marketing, when I did my first TV commercial, it was a TV commercial that I spent $40,000 on producing and another $50,000 on actually distributing. And that was when my income was like $60,000 a year. Like that was 2013. And in 2012, I made 60-ish K a year. I think I net like 49 or 51, something like that. So the point is, I spent a lot of money on this TV commercial. Well, when I published it, the World of Warcraft community thought I was making fun of World of Warcraft players. They didn't know that I was a Warcraft player myself, and I was just making a contrast between real estate agents. Anyway, I got a lot of hate on that video in the World of Warcraft community. People thought I was making fun of people in World of Warcraft. Crazy thing, though, is that virality actually led people to call me interested about real estate. And so there is something in the media business known as no press is bad press, and that sometimes when you have bad press, you can actually end up with net more customers than when you only have good press. It's kind of like, would you rather have a really viral video that 50% of people hate, but 50% of people love, but it gets 10 million views? Or, and you gain, let's say, 5 million subscribers like that, right? Or 5 million loyalists who are like, oh my gosh, this is the best thing ever. Because even if you got 10 million views, you're probably not going to get 5 million subs right away. But anyway, would you rather have that? Or rather make a video that everybody loves, but 1,000 people watch it and maybe all of them subscribe, right? So there is that no press is bad press reality when it comes to media. And I know this sounds crazy, but we're gonna actually look at some data here. But I believe it's very possible because especially since Robinhood was doing a promotion during this controversy, it's very possible that Robinhood came out of this controversy even better and stronger than before the controversy. Because at the time of the controversy, Robinhood said they were going to consider delaying their IPO. Now, it seems like they're back on track. If anything, they might even be trying to expedite this because they had such a good quarter one. Speculation, right? But let's take a look at some data. In order to take a look at some data, it's really useful to think, well, what kind of data should we look at? In my opinion, the first type of data we should look at is website traffic data relative to competitors. And so I like doing that. And then we can also look at some search trends. So let's go ahead and pull some things up. So the first data set I'd like to look at is Robinhood.com's website metrics. And what's fascinating here is the fastest rate of growth that Robinhood has ever had, at least within the last 3 years, has occurred right here around the January 28th crisis. Now you have to know what's happening at Robinhood. Robinhood had a promotion which they've never had before where you would get 4 free stocks with Robinhood if you signed up between January 23rd and February 1st. That promotion is now over, but that is also right overlapping the period of time they had a massive controversy. So literally, they have a massive controversy. The company goes into peak media mode, and people are like, oh wow, they're also giving out 4 free stocks, and so many people use it. If people are like, hey, I wouldn't have bought GameStop anyway, they might end up signing up for Robinhood. And quite frankly, the growth, even though it's not as rapid, that slope of the line there is not as rapid anymore over here. It's flattening a little bit. It's not plummeting. Like their website traffic is doing very, very well. Let's compare them now. Let's compare them to Robinhood, Webull, Public, and SoFi. Now, this is a little bit of an asterisk because not all of these websites let you trade on the actual website. So it's difficult to say we can immediately compare Robinhood.com to some of the other brokerages because I'm not familiar as much yet with Public and SoFi. I know they've got apps, but I don't know what you can do on the website. So it's worth noting that we shouldn't say that Robinhood's better because people spend 14 minutes on the website, but only 2 minutes on, let's say, Public, because they could be on the app, right? What we do want to look at, though, is an increase, the green numbers here, which even though they do this stupid little green arrow because it's green, even though it's pointing down, this is an increase. So on average, over the last 3 months compared to the prior 3 months, Robinhood users spent an additional 1% of time on the website. So we didn't really get much of a change over time there. Comparing Webull, we don't have a metric for them, but comparing Public to itself, we got a 30% increase in the amount of time spent on the Public website, which is very good. And at SoFi, we had a 65% increase on time spent on website, which is very, very good. Now, if SoFi lets you do trading on their website, it's still half of what Robinhood's is. Now, I'm not going to go into the other brokerages because this is really just a first impression video here on my thoughts for Robinhood. Now, remember Robinhood's growth here on the chart, and take a look here at Webull. Notice that they had growth around this period as well, but nowhere near the scale that Robinhood had. And it's actually slightly turned negative at the end there. Whereas, and this could be, promotion based, whereas Robinhood, though, still pointing up. Let's look at another one here. Public.com went up substantially right here. You got a nice inflection point, but look at that flattening and slightly turning down there at the end. And then SoFi's doing well. A nice increase here. Also a tiny little bit of flattening, but not pointing down yet. So these are important things to consider is how are these websites ranking amongst each other? Now, obviously, it's helpful to put all of these on the same chart just so we can compare them all together. I like starting with them individually, though, because when you put them all on the same chart, it can get a little bit messy a little bit fast. So anyway, here's that chart. Robinhood is the green. Webull is the yellow line right here. Public is down here and SoFi is here. You can see that SoFi has actually had the slowest growth in this space out of all of them. They've kind of been floating around this space for a while here. Recently, yeah, they had a bump, but they're not growing anywhere near at the rate that like a Public is growing. Public, this is very, very nice growth, basically from non-existence to competing. Good, that's good. But still, Webull and Public,
doing a little bit of that curvature down. Robinhood still dominating with curvature pointing up, and SoFi somewhat flat here on this particular chart. It's interesting. This is good information to take a look at. These are all website analytics. Now, another thing is we've obviously had a lot of negative attention regarding people wanting to brokerage transfer out of Robinhood. Totally makes sense. It's useful to note, I'll just keep myself hidden for a moment here. It's useful to note that the Google Trends data obviously had a spike right around the time of the crisis, but a lot of this has not lasted. You know, people have kind of stopped searching for this almost entirely. Transfer. Now, this is not something I would ordinarily search for because, like, this is what I search for, transfer out of Robinhood, because that's what I would write. But Google actually recommended this as a breakout search term. How do I cash out on Robinhood? And so I thought, okay, I'll click on that too and see that, well, that has pretty much disappeared as well. And then if we look at Robinhood versus Public and Robinhood versus Webull, assuming that people might want to comparison shop, we can see Webull has a very, very big competition against Robinhood for people comparing the two. Public, not so much. SoFi didn't even rank on this. It was like a flat line. But clearly you could see the interest in even comparison shopping right now is declining. And look, I'm not here to try to shill Robinhood. I'm honestly surprised. Like, I thought I would see user growth decline, which we don't actually have user growth yet currently, the current numbers, but I certainly thought we would see website traffic data decline and that we would see search data continue to stay stable of people wanting to complete their transfers out of Robinhood. Now, we'll see once we get more disclosures from Robinhood, because see, this to me is a little bit misleading. When we get, this is from CNBC, this is a little bit misleading in my opinion because this here says Robinhood leads in app downloads amid GameStop frenzy, but this is actually, in my opinion, very misleading because there should be a footnote that says Robinhood ran a get 4 free stocks promotion during this time and before the time, they started the promotion before this time, coincidentally at the same time, and they had never done that before. So, like, what would this line have actually looked like if there was no promotion? Honestly, I mean, sure, they had peak media, but would it have been like here? You know, would it have been negative? I don't think it would have been negative because I believe the whole no press is bad press thing, but I don't think it would have been this mad if it weren't, you know, we probably somewhere around here is my guess. So this right here is probably from promotion. This right here would have just been normal people interested in signing up for stocks because they just saw a bunch of people get rich off GameStop and then get broke off GameStop. So this is not an endorsement to buy or sell GameStop, okay? Anyway, focusing on Robinhood. How do we now value this company? So now we've got a little bit more background, right? We realize that, okay, I mean, Robinhood's traffic data is still good. It's true. Maybe we are overexposed to this echo chamber that can sometimes be YouTube, that maybe we think people hate Robinhood more than they do because maybe a lot of people in YouTube and the Reddit community do. And that totally is understandable. And again, we still don't really know what happened on Jan 28th, but I get it. But the rest of the world is not here, right? Now, the Wall Street Journal here mentions that Robinhood had an internal valuation in August of $12 billion. But they recently raised $3.4 billion like this while the GameStop crisis was going on. I doubt they were able to raise $3.4 billion without that valuation skyrocketing. My guess, and based on estimates we're seeing online, based on New York Times reports and also CNBC or Wall Street Journal, it seems like a lot of folks are pointing to somewhere around a potential valuation of $40 billion for Robinhood, but it could potentially even be more than that. See, the valuation of Robinhood might be $40 billion internally, but when this goes to public markets and Robinhood shows how much profit they make, which we don't know how much the profit they make yet. We don't even know if they make money. We don't know how profitable they are yet. These financials are all sealed. We don't have them, private companies, so we don't know. But anyway, when those numbers actually come out, if they're impressive, I think 40 bill is going to be a joke. And I actually don't think that Robinhood is going to value their company for $40 billion when they go to IPO. Why do I say that? Well, because I got my hands on, which I can't show on screen, but I got my hands on some private equity data. Somebody who bought shares inside of Robinhood, off market, sort of pre-market. And the share price was $60 per share, and the implied valuation was $61.3 billion. So that means somebody bought Robinhood shares at $60 a share with a valuation of $61.3 billion, which is really, really high. It sounds really, really high, right? But what if I told you this? What if I told you that those shares sold in the pre-market? In other words, somebody was able to buy these shares in the pre-market before other people in sort of the private market, I shouldn't say pre-market, private market, were able to have access to them. And that when this was opened up to the actual private market, there was a bidding war for these shares. And there was I think it was like a $20 million wait list on this platform for people to try to get shares. This is just information that I'd gotten. I don't want to mention, platforms or people or anything involved right now. But the point is, I think there was somewhere around like $5 million of shares available to be bought privately, and they had a backup of like 10 to 20 million shares or whatever in overbid for those shares to try to get their hands on those shares. So the appetite to get people's hands or for people to get their hands on these Robinhood shares is like really, 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 really freaking high. I don't think Robinhood's going to want to leave that money on the table. Certainly not all of it. Now, they're not going to price at a premium because they want a big opening day. But I would not be shocked to see Robinhood come out with an $80 billion IPO valuation, and then on IPO day, Robinhood potentially extend to over $100 billion. Now, why would I say that? That sounds crazy, right? Yes, I know. It's going to come down to profitability and comps. Here's the thing. PayPal has 361 million users. They're worth about 200, this is actually billions. Their current market cap is $278 billion. Stripe, which is a private company with 2 million users, which these are different users, so we shouldn't really be comparing users, but Stripe has a valuation of $95 billion in the private market. Kind of like how I was describing this $61 billion-ish valuation for Robinhood. That same thing for Stripe is $95 billion. And to make that clear, that was a $61.3 billion implied valuation. Yeah, share price 60. Okay, anyway. Then Square/Cash App, we have $97.9 billion. So you have to ask yourself, could Robinhood be as big as Cash App and Square? Now, Cash App and Square have 30 million users. This is recent numbers, or recent numbers here. We don't know how many users Robinhood has right now. We just know that in 2019, Robinhood had 10 million users. But folks, COVID? I would not be surprised if COVID has 3x this for Robinhood. And if Robinhood is at 30 million active users even after the crisis of January, it would not shock me for Robinhood to have a valuation somewhere around what Square's is. Now, Square has a lot of things going. They've got business integrations, the credit cards business, which is somewhat hurt by the pandemic. Maybe that'll be a good reopening play. And when I say credit card business, I mean the credit card processing business, the merchant operating business, the omni-channel where businesses can combine their business inventories with online inventories, their Bitcoin ownership services, which Robinhood uses as well. Square actually owns a Bitcoin, which I don't think Robinhood does because I'm pretty sure they're just using an index or like a fund to track the price of Bitcoin. But anyway, the point is they have differences, but they also have a lot of similarities. Square, Cash App, they're coming out with the debit card. They just got a banking license. Wouldn't shock me to see Robinhood come out with a credit card soon as well. We know they already have a high yield savings. Well, it used to be high yield savings, not anymore. And a credit card, a debit card is what they have right now. So it wouldn't surprise me to see 60 bill be low based on these other valuations. Because quite frankly, when Stripe goes public, would not shock me at all to see Stripe be a $150 billion company. Just would not shock me at all. And Square, well, I mean, the stock has been absolutely hammered over the last few weeks here in sort of this tech sell-off. But if we gave some of this tech sell-off valuation back to see how frothy things got, you probably want to add like 30% to this, which means Square could be like a $130 billion company. All of a sudden, it doesn't sound so unreasonable for Robinhood to maybe be at 100, right? And it depends. It's totally going to depend on what the market does at the time as well. Now, TD Ameritrade has 11 million users. The growth is pretty slow. And they're at about a $21.6 billion market cap on the Canadian exchanges. Robinhood, again,
latest sort of private rounds were oversubscribed at 60 bill. And those are private sort of secondaries. Like Robinhood wasn't selling those shares. This would be like an employee of Robinhood going, yo, I want to sell some shares. Who wants to buy them? And then a ton of people going, yo, I want to buy them. And then eToro is a SPAC. They're going public through a SPAC. I'll look up what the name of this SPAC was. It's like FCTV or something like that. SPAC. Anyway, I'll figure it out. eToro. So anyway, they're a very interesting platform, and they got 20 million users. Kind of exciting. But they're more of like a Europe and international company. They're not so heavily used in the United States. So that could weigh on its valuation in America, certainly by American speculators or investors, or whatever we want to say. But then again, in fairness, SPACs have been selling off like crazy. I found it. The correct ticker symbol is FTCV. So Foxtrot, Tango, Charlie, Victor. FTCV is eToro, $11.80. It's a SPAC. And SPACs have absolutely gotten destroyed in this latest sort of SPAC crash that we're seeing. So this gives you some perspective on Robinhood. Now, this article actually did not have much exciting in here. It kind of just talked a little bit about GameStop, talked about that $12 billion valuation. Not too much useful in this one, but definitely made me think about sharing some of my thoughts on the Robinhood IPO with you. Now, stay tuned. I plan to release a video on the lawsuits that Robinhood is dealing with from this whole GameStop crisis, so stay tuned for that. Let me know if you're interested in that. I want to dig through the lawsuits and see what people's claims are, how they're going, and so on. Thanks so much for watching, folks. We'll see you in the next one.